Hey, thanks for signing up on my website. My name is Manoj. I'm a real estate agent with RE/MAX. Before I begin the presentation, I do want to let you know is what I'm about to discuss here is for first-time home buyers, and it's a very high-level overview of the different strategies. Before you try and implement any of these strategies on your own, make sure you talk to an accountant or a financial planner and your bankers, because what I'm discussing here is very high level. If I went through everything, you'd actually be bored out of your mind. So I'm not going through everything. Talk to your financial advisors, planners before you implement anything. If you have any questions or concerns, always feel free to give us a call. So let's get you to increase your down payment. I'll be discussing 3 different strategies that'll help you achieve that. Number 1, I'll show you how you can deposit part of your down payment into your RSPs, then take it back out to purchase your first home and get the government to give you $11,000 per person. Second strategy I'll talk to you about is an RSP loan option. So let's say, for example, you only have $20,000 as a couple to buy a house. I'll show you how you can turn that 20 into 40 by getting the bank and the government to fund the rest. The third strategy I'll talk to you about is a Peel Affordable Home Ownership Program. If you don't live in Peel, that's okay. There may be a different one available for you. Give me a call and I'll see if there's one available in the area. Now, before I begin any of the strategies, you need to understand some of the basics of what an RSP is. So, an RSP is a Registered Retirement Savings Plan. Its main intent is for you to save for your retirement. But you can also use it to purchase your first home and withdraw up to $25,000 from it. The main benefit of this plan is that you get a tax rebate for every dollar you put into this plan. So let's say, for example, your income is $60,000 and you put $10,000 into your RSPs. The government will turn around and give you a tax rebate of $2,965 when you file your tax return, which is about a 30% tax rebate. Now, the higher your income, the higher your tax rebate will look like, and unfortunately, the lower your income, the lower your tax refund will look like. In order to qualify for this program, there are some restrictions. I'm just going to highlight some of the main ones for you. You need to be a Canadian resident. You must be a first-time home buyer. If you haven't owned a home in Canada for the last 4 calendar years, you can still qualify for this program. So, in order for me to explain this a little better, what I'm going to do is I'm going to create a fictitious couple. Let's call this couple Mario and Princess. Now, these are real-life examples that I've seen in the past as a banker and a realtor. So, let's say Mario and Princess are newlyweds. They have $50,000 to put towards the down payment on their first home. They currently have no RSPs. They've never owned a home in their lifetime in Canada. So I'll get Mario and Princess to deposit $25,000 each into their RSPs, which, mind you, they can take out 90 days later without any penalties. Only to purchase your first home, of course. So let's say, for example, they both earn $65,000 each in annual income. They go to the bank, deposit $25,000 into their RSPs. When they file their tax return, they'll both get roughly $7,000 each in tax return, and that's collectively about $14,000 they got as a tax refund. So now what we've done is we've increased your down payment from $50,000 to about $64,000. It's not bad. Let's move on to scenario 2, which is still part of first strategy. So let's say, for example, Mario and Princess made $120,000 instead of $65,000. Remember, the higher income, the higher your tax refund will look like. So if their income is $120,000 and they both deposit $25,000 into their RSPs, they'll get about $11,000 back from the government, which collectively is about $22,000. Now, instead of having $50,000, you have about $72,000 to purchase your first home, which is obviously better because the higher your income, the higher your tax rebate will look like. Alright, so strategy 2. The main question I'll be answering here is, how can you maximize the first time home buyers plan between you and your spouse? You have $20,000 and you'd really like to buy a home. So technically $20,000 is 5% down on a $400,000 home, which means you can purchase a home worth $400,000 as long as you can qualify for the mortgage. Because realistically, all you need is 5% down and closing costs in order to buy a house. But I'll help you increase that in this strategy. So what I'll be doing is I'll be discussing an RRSP loan option. So before I jump in, let me tell you what some basics are of an RSP loan. It's a loan the bank gives you to deposit money into your RSPs and then hold this money as collateral until you pay off the loan. Usually they'll charge you anywhere between prime to prime plus 1, which is about 4.5% in January of 2018. You can defer the monthly payments in most banks for up to 6 months, which means you don't have to make any monthly installments on this loan. In my strategy, you'll take out the loan for about 90 to 120 days, because realistically you don't actually need it for longer than that. Once again, I'll use Mario and Princess to explain this a little bit better. In this example, I'm going to say Mario and Princess have $20,000 as a down payment. They want to fully capitalize on the home buyers plan. They both checked their notice of assessment and found out they have sufficient room available to maximize their home buyers plan. Now, remember, you need to check your notice of assessment before you deposit any money into an RSPs, because you need to make sure you have the room available. Okay, so going back to the example, let's say they split the $20,000 they have and they deposit $10,000 each into their RSPs. Both of them need an additional $15,000, so we're going to go to the bank and get a loan for that amount. So once again, we're going to assume that Mario and Princess are making $65,000 each. We're going to deposit $10,000 from their savings account into their RSPs. We'll get the loan for $15,000, which makes it total $25,000 that they'll deposit into their RSPs. Once they file their tax return, they'll get a tax refund of $6,998, $7,000 roughly each, which makes a total rebate of $14,000 roughly, which now they've increased their down payment from $20,000 to $34,000. Nice chunk of money. Now, I'm going to assume the same thing. Let's say Mario and Princess are making $120,000. If they followed the same path, depositing $10,000 from their savings into their RSPs and getting a loan for $15,000, technically their tax refund will be close to $11,000 each, which makes it $21,704. Now they've increased their down payment from $20,000 to $41,700. So, like I said, you can increase your down payment from $20,000 to about $42,000. Now, you're probably wondering how much will the bank charge you for this loan. It's actually quite cheap. So the cost of an RSP loan, they're borrowing $15,000. Let's say at 4% will work out to be $50 on a monthly basis. Like I said, you only need this loan for literally like 90 days. That's 3 months. So, you know, you do the math on how long it takes. It's going to take you literally $150 per person to $300 per person. So the money you withdraw from your RSPs needs to be put back into your RSPs. The way that works is if you withdrew $25,000, the government gives you a 2-year grace period, which means you don't need to make any monthly payments or any payments into your RSPs. It's practically a loan you give to yourself. After that, if you withdrew 25, if you withdrew less, you would do that divided by 15, as in 15 years. You'd need to actually deposit $1,666 per year for the next 15 years into your RSPs. If you don't, basically $1,600 goes into your income. So, and you have to pay taxes on that. So instead of, let's say, 40,000, your income becomes $41,666, and you pay a little bit of taxes on that. Third strategy, the Peel Affordable Home Ownership Program. The way it works is it's designed to provide low to moderate income residents who are currently renting a unit in the region of Peel, which consists of Brampton, Caledon, and Mississauga, the opportunity to qualify for a loan assistance program to purchase a home only in Peel. Approved applicants can get up to $20,000 in down payment assistance. The program will basically assist eligible applicants that have a total gross family income of $87,800 or less to purchase a resale home in the region of Peel. Now, your purchase price, unfortunately, cannot exceed $330,000. This was what the rules were set out in 2017. We'll find out what the rules are set out in 2018 and 2018 once they come out. So the program actually takes place between March to May every year, and it's on a first-come, first-served basis. So you need to have your applications ready beforehand and all the documents ready. So as soon as the line opens, you're basically the first one to submit all the required documents. You do need a mortgage pre-approval with your application, so make sure you have that ready. Otherwise, they won't even look at your application. Now, to find out more about it, you can actually go into this link. I'll have that available on the web page or the email that you've received this at. If you have any questions or concerns about any of this, please always feel free to either give me a call directly and I'll be happy to answer them for you, or you can email me at info@manojkukreja.com. Once again, my phone number is 416-994-0188. Thank you for taking out the time to listen to me, and I look forward to hearing from you.